Hi, I'm Tara Benham, National Tax Leader for Grant Thornton. I'm here today speaking with Mike Stubbing, one of our tax service line leaders, who's going to give us some insight into what we can expect for the federal budget coming up. Welcome, Mike.
Thanks, Tara. I'm happy to be here.
So, to set the background on this, we haven't had a federal budget since March 19th, 2019. On April 19th, 2021, we're set to have our next budget. So that means it's been 2 years since we've had one of our budgets. Lots of speculation on what we might see in this budget is coming forward. With all the spending to support Canadian businesses and Canadians throughout the pandemic, what we'll be looking to see is what is the government going to do to help manage the recovery. So, Mike, perhaps you can help set the stage and give us a little bit of an economic overview while we wait for the budget. Where are we right now, and what is your perspective?
Sure. Well, if we look back at the last year, and in fact, as you mentioned, the last 2 years since our last budget, no question, the most important item impacting the economy has been the pandemic and the response and recovery to the pandemic. And here we are, a little bit over a year into the pandemic. Where are we at? Well, when we look at businesses and industries, they're at very different stages as we go from business to business or industry to industry. Some are really struggling, whereas others have experienced higher levels of demand of their particular good or service, or they've been able to take advantage of certain efficiencies and cost savings that they've been able to realize over the last year. And they're actually doing quite well. And in fact, in some cases, even better than they were doing pre-pandemic. When we look across the country from a geographical perspective, we see the exact same thing. Certain regions have managed things very well, a combination of good management and good luck, and are largely open, and their economies are functioning quite well, whereas other regions are still in some degree of lockdown or restriction. So, whatever the response is, it can't be a one size fits all response. It has to be tailored to certain industries and certain regions depending on the level of severity of economic impact. Now, we do know the government messaging has been very clear that they intend to support businesses and individuals throughout the recovery. So we expect to see that. Now, the other thing that underpins all of this is in the October 2020 fall economic statement, the government projected a budget deficit for the 2021 fiscal year of about $382 billion. That is by far the largest since Canada began tracking budget deficits in 1966.
So you're right, Mike. This really has had a huge impact on our economy this last year. So let's look at what this means for our businesses and us as personal taxpayers. During the consultation on the budget 2021, Finance Minister Freeland stated that the budget would be about jobs, growth, the middle class, COVID recovery, and really focusing on a more sustainable economy. So what does this mean for Canadians? What do you think, Mike?
Well, we'll probably see a further extension of programs to support businesses, including the existing wage subsidy and rent subsidy programs, which are currently both set to expire on June 5th. Now, whether or not we see a continuation of those in their current form or some modified or more tailored form remains to be seen, but we expect something there. We're also anticipating a simplification or an expansion of programs like EI, the Canada Recovery Benefit, and the related sickness and caregiver benefits. Now, we know from the government messaging that job creation is a priority. And as part of this, we anticipate to see some plans about a national childcare program or initiative to help women who statistically tend to be the primary caregivers return to work. We know the statistics are very clear that employment of women has been much more dramatically impacted than employment of men throughout the pandemic. Now, the fall economic statement from October of 2020 also introduced something called the Highly Affected Sectors Creditor Availability Program to support businesses and industries that were hard hit, like tourism and hospitality. I expect to see some building on this program and perhaps some more targeted aid to certain industries like airlines and resources such as oil and gas. And I also suspect that we'll see some support for industries that the government wishes to grow, such as public transit and renewable energy.
Great thoughts, Mike. So, as you said before, the government has projected record breaking deficits of $382 billion. We can contrast that to what they were projecting pre pandemic, which was $119 billion. So, an amazing amount more in spending. With all of this spending and a commitment to continue to support businesses and individuals, what are some of the tax measures that the government might consider implementing in this budget?
Well, a few things that we're watching for. So the first one would be limits or restrictions on the existing stock option deduction rules, particularly for larger or public companies. This is something that the government has already been talking about for a couple of years. We do anticipate some legislation related to this. This is generally seen as something that most benefits high income individuals. So outside of the middle class type of individual that the government has been very clear that they're wanting to support. Now, in the October 2020 fall economic statement, a number of measures related to sales tax were introduced. So this included sales tax on digital products and services sold by non-residents into Canada. This is the so-called Netflix tax. We also saw an enhancement of the GST or HST rules surrounding certain physical products that are shipped into Canada by non-residents. And we saw the addition of GST and HST to short-term accommodations booked online. Now, we may see some further details of these rules in the budget, but I continue to see sales tax as an area of opportunity for the government to raise additional revenues. That's because it's ultimately a tax on consumption, presumably targeting those who can afford to spend on discretionary and luxury items.
Makes a lot of sense, Mike. So the government has pledged not to raise taxes. As recently as December of 2020, they said this. So if they do continue to invest in all of the COVID support, do you think that we might see something like an additional version of a tax, particularly something that targets wealthier individuals or corporations?
You know, there's certainly been a lot of speculation in this area amongst the press, amongst the tax and business communities, and elsewhere. So some of the things that we're hearing a lot about are changes to the taxation of capital gains, specifically changes to what's called the capital gains inclusion rate. So currently, when someone realizes a capital gain on an asset, only half of that gain is taxed. Now, that hasn't always been the case. In the past, either two-thirds or even three-quarters of capital gains have been taxed. There's been a lot of speculation for a few years, and it's particularly heightened right now that our current 50% inclusion rate could increase to two-thirds or three-quarters. Now, there's various political parties have already campaigned on this, political parties that are generally supporting the existing Liberal minority government. There's also been some studies that have been done within Canada very recently by the government that have shown that an increase to the capital gains inclusion rate would only materially impact about 10% of taxpayers in Canada. So again, generally the higher income or the wealthier individuals, not the middle class that the government is focused on. We're also seeing some activity in this area around the world. There's a lot of discussion in the US and the UK, amongst other countries, about increases to the capital gains rate. Now, whether or not that happens in this coming budget or over the next couple of years remains to be seen, but we certainly do expect to see some changes in this area. The second area where we hear a lot of speculation about and a lot of concerned chatter about is in respect of the principal residence exemption. So currently when someone sells their home, their principal residence, subject to certain limitations and certain rules, any gain on that principal residence is tax-free. There's a lot of speculation, and we know that the government has launched a study, and they spent a fair amount of money on a study looking specifically at the taxation of principal residences and the principal residence exemption and the impact on taxation revenues. We do anticipate that there is a good likelihood that there could be some changes in this area. Again, whether or not that happens in the current budget or over the next few years remains to be seen. Very likely, if there are changes in this area, it wouldn't be a wholesale removal of the principal residence exemption. More likely, it would be changes to the exemption, such as more restrictions on what sorts of properties, what sorts of situations will qualify for an exemption, and perhaps limits on the amount of the exemption. And then finally, we do hear some speculation, there is some discussion out there about the possible introduction of a wealth tax. And there's a number of different thoughts and approaches to this, and several European countries and non-European countries have implemented some degree of a wealth tax over the years. And while a wealth tax does sound very appealing to those from certain political stripes, the actual implementation of a wealth tax would be extremely complicated. It'd be quite expensive, and it would result in a somewhat subjective area of law. So I suspect that if we were to see the introduction of a wealth tax, it would focus on more easily measurable assets, such as publicly traded securities or real estate, rather than a full-scale tax on wealth.
Thanks, Mike. Those are some pretty big changes if they happen. So I think we can agree that Budget 2021 is going to be one of the most important budgets in recent history, certainly the most important one in the last 2 years. We will be continuing to look and see what kind of tax increases are introduced to pay for this debt. And we really do understand the need for our government to support and keep our country going. But how long can they continue the support? So what we're hoping for is to see some clarity in Canada's economic outline and what the road to recovery looks like for us. Check out our pre-budget alert for more details and stay tuned for our budget and our post-budget updates. Thanks.